Hey guys, what's up? Alec back with the daily stock market, and look at that. Interesting things going on in the stock market right now. Enphase Energy and other energy stocks have absolutely collapsed, down 15% just in one day. And in the last 3 months, we see Enphase Energy down 44%. So in one of the next videos, we're going to talk about energy stocks and some of the best ones and what's going on exactly. In the last video, we talked about Sphere Entertainment and how this could be a good meme stock. Right now, it's up 63% year to date and an IPO'd at a closer price of $100 per share. So if you want to hear about Sphere stock and if it could reach IPO prices again, in my opinion, then make sure you check out the video where I talk about some of the most popular high risk stocks and my opinions on them. But in this video, we're going to talk about the exciting earnings week ahead. Super exciting. We have Microsoft, we have Google, Snapchat, Visa, all reporting just in one day. We also have Meta platforms and Amazon reporting this week. But enough with the spoilers. Let's go over day by day what's going on. Monday is not that exciting, so let's automatically jump to Tuesday. Now, before the open on Tuesday, we have Coca-Cola, we have Verizon, we have GE reporting, 3M, and Spotify. We also have Next Era Energy. Keep an eye on Next Era Energy, guys, NEE, because look what happened to these other energy stocks like Enphase and Sunrun and Solar Edge and stuff like that. Next Era Energy could be the next stock to fall huge on earnings. We also have GM, General Motors, reporting on Tuesday before the open. Now, fast forward to Tuesday after the close, we have Microsoft, we have Alphabet, which is Google, we have Snapchat, Visa, Teladoc. So needless to say, Tuesday is one of the most exciting days in the stock market. Get ready for that because we have lots of big tech stocks. We can talk about Microsoft, we can talk about Google, we can talk about Snapchat, Visa. So make sure you stay to the very end of the video because you're not going to want to miss out on any of these updates, especially when there's so many big names reporting like this week. So we have Boeing reporting Wednesday before the open. We have Meta reporting Wednesday after the close. And we have on Thursday before the open, Royal Caribbean, UPS, Hershey's, Valero, which is an oil company. And then after the close on Thursday, we have Amazon, Enphase Energy's reporting after the close. It's going to be very interesting to be tracking. But Amazon is obviously going to be stealing the show on Thursday. But we also have Intel, Ford Motors, Chipotle, Skechers, very big brands. And then Friday before the open, we have some oil companies reporting like Exxon, Chevron, Phillips 66, and so on. So we can definitely get some hints this week. For example, Royal Caribbean, we can look at Carnival, see how they performed. Ford Motors on Thursday after the close. We can look at GM, General Motors, on Tuesday before the open, their earnings, and kind of get an idea there. T-Mobile's reporting Wednesday before the open, which we can kind of get an idea from Tuesday before the open. We've seen Verizon reporting. Next Era Energy will also be important because Thursday we have Enphase Energy reporting after the close. Reporting Tuesday after the close, we have Visa alongside Snapchat, Google, and others reporting also. But Visa, I think, is a great one to talk about because it shows kind of where the public as a whole is at and the average consumer is at. You know, if more people are using credit cards and, you know, more people are using debit cards, then that's a good thing for the economy to see that spending, specifically spending, is not slowing down. It's actually increasing. So I think that's that's why I think Visa is a good one to talk about first of all. So let's go over them. The year to date, we have them up 11%, by the way. They are towards a support of around 225, and the resistance is closer to that $240, $250 mark. So I definitely think that Visa could be trading above 250 again, especially if we see a good earnings from Visa. Don't be surprised if we see them above 250 very shortly. However, if we see a bad earnings, they could fall down to 225 or even lower. Now, for long-term investors, I think Visa is a great one also. Price alerts below $200 per share, closer to 180, are a definite pickup and a steal. In the last 5 years, you've only had an opportunity to buy them at that price very seldomly. Okay, they were founded in 1958. They have a market cap of 474 billion. But remember, they're also the largest credit card and debit card processors in the whole world. Visa. They're the number one. So they have a huge competitive, durable advantage above Amex and MasterCard. It's kind of like a duopoly between Visa and MasterCard, honestly. But American Express does have some of that market share. The PE ratio is 30, implying that they are a little bit overvalued compared to the rest of the market. However, I think that's well deserved because they have a moat that commands a higher PE price, closer to 30, 32, even 35 would be acceptable for Visa. So these prices are a great place to buy for long-term dollar cost averaging in for long-term investments. We also have a dividend yield of 0.77%. So yes, Visa is a dividend stock. If we look at what's going on in the past 4 quarters for earnings, they've beat analyst expectations every single time in the last 4 quarters, and they've also been growing their EPS and earnings year over year, quarter over quarter. You can see the growth going from under $2 to being consistently over $2 EPS. And this quarter, it's expected at $2.24 on their EPS. So they'll probably beat and be above $2.25 EPS for Visa. But let's dive a little bit deeper and see what's really going on, if we're expecting something bearish or if we're expecting something bullish from the announcement on Visa earnings. Okay, so here we can see the factors driving Q4 earnings right now for Visa. Visa's fiscal fourth quarter results are anticipated to be fueled by ongoing growth in travel and entertainment relating spending. So think about how many people are spending on travel and entertainment recently. And if you're bullish on those 2 categories alone, then you could be bullish on earnings for Visa. Furthermore, the continuous adoption of popularity of digital payment methods are expected to have continued during the quarter, contributing to Visa's overall performance. The estimate for the fiscal fourth quarter total gross dollar volume indicates an increase of more than 6% from a year ago period, whereas about our model predicts around a 4.2% growth. Okay, as the company draws revenues as a set percentage of total transaction volume every time a customer makes a payment with a debit or credit card, higher spending means more revenue in the form of transactions processing fees. Now here we have an analyst very bullish on the earnings. We can see the summary of this article. Visa is a market leader in electronic payments with a strong moat and industry-leading profitability margins. In the post-pandemic era, the electronic payment industry is expecting favorable trends that are expected to benefit Visa's future prospects. I anticipate Visa to report a robust fiscal year 2023 Q4 earnings with a yearly sales increase of 10.8% year over year and an EPS reaching $8.68. Holy cow. Remember, that's a far cry away from the EPS currently. Visa stock rarely goes on sale, but today the company is trading with a 14% discount to its historical averages. Visa is a rock solid choice for dividend growth, having increased its dividend by a remarkable 350% in the past 10 years with no slowing down in sight. So as much as I want to go on and on about Visa stock and their earnings and keep doing my deep dive into them, we're going to run out of time. So let's talk about Google stock. You know, we can see that analysts are very bullish on Visa stock, and that's definitely not going to change this quarter. So going over Google stock, we have ticker symbol GOOG pulled up, but you can pull up GOOGL. By the way, they are the exact same stocks. We can see in the last 3 months, Google's up 13%, and year to date, it's up 52%. Okay, so it's an interesting time. We can almost see they're at an all-time high. And if they make it above $149 per share, they'll be setting an all-time high. Now, they have a stronger support around $100 per share, $90 per share. which would be a big drop from current prices, over a 25% drop to reach those price targets. And that's definitely where I want to be buying the heaviest. As we scroll down, we can see that this is a $1.8 trillion company, one of the largest companies in the entire world, with a PE ratio of 28. So their PE ratio is lower than something like Visa, keep in mind. Here's something also to consider for earnings. Big tech puts gains to the test with Q3 earnings. So right now, what's going on is a lot of these companies like Meta, Tesla, Google, Amazon have had huge gains in the past year in 2023. So if they report soft earnings, there's a chance that they could start erasing some of those gains. Okay, the AI story is expected to be company dependent, but an analyst wrote that Meta, which benefited from the AI bump last quarter, could still have more room to run off the promises of the technology offers. We like Meta, and despite elevated expectations in Q4, we think the Gen AI consumer app bull case is still underappreciated and not priced into the shares, an analyst wrote on October 16th. Meanwhile, another analyst doesn't see meaningful AI contributions for Microsoft this quarter. Something to think about. While the key AI lifts aren't landing in the Q1 September quarter, broadly, the stock market has been less about earnings and more about higher yields and what that could mean for the Feds. Bond yields have soared since the last time the Feds met in late September. Yields on both the 10-year and the 30-year treasuries are at a 16-year highs, and some Fed officials have remarked that the financial tightening brought on by an increase in yields could effectively take place of another Federal Reserve interest rate hike. We have to let this play out and watch it, Jerome Powell said at the Economic Club of New York on Thursday. But for now, it's clearly a tightening in financial conditions, and so we'll be watching it carefully. A more exact answer from the Fed's chair in 2 weeks could be the key to freeing stocks from their bond behold misery. It's all about the Feds. Invesco chief marketing strategist Christina Hopper told Yahoo Finance Live on Friday, once we get the clarity from the Feds, the rate hike cycle is over and we have more of a sense of rate cuts coming in 2024. That to me will mark a very significant shift for markets where investors can become more risk on, where we're likely to see yields start to fall. Okay, so let's go ahead and read some more about Alphabet. Like Microsoft, Alphabet is expected to see revenues reaccelerate to the low double digits through Q2 2024, a marked acceleration from forecasts at the beginning of the year. Revenue for Q3 is forecasted to rise 9.6% year over year to $75.7 billion, with EPS growing 36% year over year to $1.44. The combination of resilient search growth, strong cloud performance, and the integration of AI into Alphabet services is driving revenue growth expectations higher. Fast forward, revenue growth rates for the next 2 quarters have risen upwards of 2 percentage points since the beginning of the year. And here you can see a chart here going over the difference between EPS and revenue growth year over year. And kind of get a visual that way. Here's another one. Alphabet revenue growth forecasted changes Q1 to Q3. So expectations are getting higher because the analysts can see the value. Search and other advertising growth is picking up, rising 5.4% quarter over quarter to $42.6 billion as Google begins building the next major evolution in search, with AI integrations driving a higher return on investment. As the IO fund highlighted previously, Alphabet's search has proven resilient because it provides advertisers an attractive return on investment on their ad spend. Looking ahead, search-generated experiences, Google's generative AI-powered search tool, will improve advertisers' return on investment and will likely provide Alphabet additionally pricing power. This will also improve their retail vertical, a trend already suffering with Q2's search growth driven by retail alongside the new launch. Google Cloud will also be under the microscope this quarter after posting 2 consecutive quarters of operating profitability, with operating margins reaching almost 5% last quarter. Revenue for cloud stabilized at 28% growth year over year in both Q1 and Q2, so they have to keep that up, as the platform remains a leading choice for training generative AI models as enterprises start to think more deeply about AI and integrating AI across their organizations. Google Cloud stands to benefit in multiple ways via its large language models such as Bard, its generative AI offerings, including the recent launch Duet AI, which I haven't heard much about, so it'd be interesting to dive a little bit into that. Offering AI models trainings with multiple AI supercomputers. So it sounds like they're going to be talking about AI and saying the word AI a lot in this earnings, and that could be a bullish thing alone. But it looks like overall, Google's going to have a bullish earnings and their stock could rise on earnings. We also see AI supercomputers, and by expanding our total addressable market and winning new customers, according to the CEO, that's what Sundar was saying. However, Google is in the midst of its antitrust trial, with regulators concerned that Google has been keeping an illegal monopoly on search. Google is reportedly paying Apple nearly $20 billion per year to remain the default search engine on Apple's devices. Now, the last thing I want to go over quickly is big oil earnings, a view to the supply chains and outlooks. We see energy giants like ExxonMobil, which is ticker symbol XOM, and Chevron, which is ticker symbol CVX, report third quarter earnings and revenue early Friday before the market opens, as the Middle East Israel war clouds the oil market outlook. ExxonMobil's also fresh off announcing its $60 billion grab of Pioneer Natural Resources, PXD. It's expected to see earnings fall 46% to $2.37 per share. Still profitable, but a very big fall. And also with the war in the Middle East clouding the oil markets right now, could be a bearish thing. The oil majors revenue is also projected to decline 17% to 93 billion. Okay, still very profitable. Meanwhile, Wall Street forecasts Chevron's EPS contracting or falling 35% to $3.60, with sales decreasing even 23%, also only 51.3 billion. Both ExxonMobil and Chevron saw record profits in 2022 on the back of surging oil and natural gas prices. While prices have come down in 2023, the war in the Middle East is making traders assess the current global oil supply at the U.S. weighs increasingly sanctions against Iran. Meanwhile, there are also concerns that if the war escalates, it could disrupt oil supply. Last week, Israel ordered Chevron to shut down natural gas production at one of its two major offshore platforms in the eastern Mediterranean. So that's all very risky, very bearish. Everything's up in the air for earnings right now, and it could be a bearish earnings for oil on Friday morning. So I hope you guys really did appreciate that video, me taking time out of my weekend, my Sunday, and making a video for you guys so we are all prepared for earnings Monday, Tuesday, Wednesday, Tuesday especially. Tuesday is going to be absolutely insane. So make sure you're subscribed with post notifications on. Slap a big thumbs up. If you want to join my personal trading group and our Discord with hundreds of members now and thousands of positive testimonials, then go ahead and reach out to me. Click on success number 9 on the highlight section of my Instagram and read through some of those positive testimonials. Lots of people have had success in the group so far, and it's an amazing experience for everyone to join. If you don't have a stock market family yet and your friends don't trade stocks, your family doesn't trade stocks, you don't have anyone to talk to, this is the #1 stock market community on the internet right now. We're all a family in there, and you're more than welcome to join our family. Just message me here at the Daily Stock Market on Instagram, and I'll shoot you over the website so you can see how everything works, what it entails, and if it makes sense to you and if it's inside your budget, then let's make some money together with the stock market and join our family. Thank you guys for all the love and support. Just slap a big thumbs up, share this video with a friend, comment what you guys want to see below next, and thank you guys for all the love and support one last time. I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.